Let's get to some committee stocks on the move, starting off with Coinbase. Shares under some pressure today as Bitcoin falls below 93,000. Joe, you own this one and the Joe T ETF.
Yes. So the end of October, October 31st, we purchased it. We still have a little bit of a profit on it. I'm just staring at the chart in disbelief how much it's fallen off of where it was at 348 in early December. So it's pulling back. It's pulling back with Bitcoin. Look, it's a volatile equity name for sure, just like MicroStrategy, which was mentioned previously by Bryn. And knowing the volatile nature of Bitcoin, if you're going to be investing in equities that have that correlation to Bitcoin, you have to accept the volatility and understand whether it's seeing it up significantly, that could reverse, or whether it's down significantly and seeing that that could reverse. It's just a volatile asset. Yeah, also to the earlier point, looking at the chart right here, up for the last 3 months, up about 40%. So even with today's pullback, you got to keep that all in perspective. It's doing not as good as it was, like I said, into early December, but it is what it is. Okay. Moving on to Tesla, also under some pressure, shares down just about 2.5%. UBS sees Q4 deliveries slightly below consensus. Brent, I want to come over to you. One thing I do want to point out about this, UBS, they have their price target at 264. That's about half of where the stock's trading at right now. So very bearish call on Tesla. But Brent, I want to get your take.
Yeah, well, I mean, if you're just looking at earnings growth or lack of and revenue, you would say this company's earnings have been decelerating, like I said earlier, the last couple of years. They've now flattened and are going to start to grow again. We're looking for earnings to grow 7%. But you understand this name is a name that people get excited about the future of robotics, of full self-driving, of AI, of solar, et cetera. And so this is not just a car company. And so I think you continue to have a few bears out there. I do think, though, I had sold probably in the 200s, the January 400 strike price. I assumed it would get called away on January 17th, but we'll see. I mean, if the market continues to sell off, this Tesla has a beta of 2, so you're going to get a magnified exposure to the upside and downside. But I would be more cautious, and I will be more cautious in my positioning going into their earnings on January 23rd, because I do think there's still some hype in the 400s on this name. I would like to see it come down a little bit more in the 300s. I feel like that would be more a normalization than these mid to high 400s that it's been trading at the past couple of weeks.
All right, again, shares down 2.5%. I want to correct myself also. UBS has the price target at 226. Consensus is 296, so still a very bearish call when it comes to Tesla. Moving on to Mastercard, hovering near a 52-week high. Rob, you own this one.
Yeah, it's done well. It's a little expensive right here at a 32 times forward PE, but this is a great business. Continues to post double-digit top-line growth, mid-teens earnings growth, despite a challenging macro environment, illustrating the strength of their franchise. And, you know, what's helped these companies a little bit, both them and Visa, the duopoly, is the cross-border travel volume. Continues to exceed expectations. Consumers are generally benefiting also from positive real wage growth and wealth effects of high asset values. So these companies have been beneficiaries, and it's no surprise to see them performing like they have lately.
All right, Mastercard pulling back almost 1%, but year to date up more than 20%.